right. Well, with that, let's invite the first company on Bazaar today. And this is a very positive reason to invite KEC International. It has secured a bunch of orders worth 845 crore as, from the railways. And then there are other orders, 580 crore from the Meerut Regional Transport, that is basically the metro, the rapid transit system, and 265 crore order for Kochi Metro. Vimal Kejriwal, Managing Director and CEO of KEC International, joins us on the phone line. First, Mr. Kejriwal, this 845 crore is 580 plus 265, or is it all told, 1600 crore of orders?
No, it is 580 plus 265.
Okay,
That's 845.
Okay. And you also told us in the press release that this marks your entry into the urban transport sector, because both these are metro rail orders. How do the margins of metro rail compare with your conventional business?
I'll say that they are slightly better than the conventional rail. Yeah, but they are new animals, so we'll have to wait and see how they pan out. Okay. At the bidding stage, we feel they could be better. Yeah.
Okay, that's good to hear. Mr. Kejriwal, good morning. Congratulations on these orders.
Morning, Sonia.
Given that there have been a slew of new orders lately, do you think you could beat that 15 to 20% growth guidance that you had laid out for the end of the year?
Revenue, I think we are in line with the 15 to 20%. Order book, honestly, I'm not very sure, because quarter one, quarter two has not been that good as we have normally. This year we have announced orders of around 1900 crores till now. Okay, which is not in line with what we will be doing at 17,000 crores. So we are just hoping that more orders flow in from the T&D sector to achieve the budget on the order book. But revenue, we are very confident.
Where are you seeing the slowdown, if at all? I mean, from which segment?
Sorry?
Where are you seeing the slowdown in orders or even some problems in execution? Which segment are you facing a bit of a hurdle?
So execution has not been a major issue for us. That's how we did 15% growth in Q1. On order intake, I think what we saw is that since last March, since the announcement of the elections, most of the tenders were cancelled or re-tendered.
Yes.
We are now started seeing these are the first two tenders which were opened after the election, and they have been awarded. So we are just hoping that the green energy corridor and other tenders will get awarded very quickly.
Sorry, I missed if you said this. What is your order book right now, and what is the guidance for the full year?
Our order book today is around 19,000 plus, so it's 19,000 crores, and we have an L1 of around 2,800 crores.
Okay. So you have very clear visibility in terms of execution for the year? For
the year, and plus I'll say another 2 quarters or so. Okay.
For the next 2 quarters at least. Are you facing any issues as far as liquidity is concerned? Has the cost of borrowing gone up a lot?
So what has happened is that the CP market has dried up for companies which are not AAA. So the marginal cost of borrowing has gone up slightly, because we have to now take recourse more to the normal working capital limits. So the expectation which we had that the rates would go down is not materializing, because we are not able to borrow in the money market directly. Okay. So I think the other related thing here is that the issues with the SMEs, MSMEs, etc. continue. So you are also ending up funding a lot of your vendors.
Oh, okay. This liquidity flow, is it government payments that are not coming on time?
It's not exactly what I said, was that the borrowing cost is not coming down.
Of course. No, that was a separate issue. But you said you end up funding the MSMEs and SMEs. It looks like people are not paying bills on time. Is it private sector or government which is not paying?
No, I think they were earlier being financed by banks and your NBFCs, etc. So I think the financing for them is becoming a problem. Okay, because of the risk averseness.
Okay. What do you expect your finance cost this year to be? Will it continue to be 80 crore as your first quarter indicated?
So what we have said is that our finance cost should be around 2.7% of our revenues. Okay, first quarter was around 3.2 or 3.3. So it will keep on going down, but it would be around 2.7% of our overall revenues.
Okay, 2.7%. On the international business front, how are things both in terms of orders as well as tender traction, say in Southeast Asia, the Middle East region? Has there been any slowdown there?
So our order book of 19,000 crores has around 51% international orders.
Okay.
So we are overall comfortable, but last year we had a good order intake. This year has not been very good at the start of the year, but I think we are L1 in quite a few projects. So hopefully by the end of Q2 or maybe early Q3, we should have a good order intake, both from Far East. We have started seeing some orders coming in from Saudi, but this oil price is a bit of a concern, so I don't know how it will carry forward.
Okay. It's almost cliched. Every industrialist talks about slowdown, but with 19,000 crore orders, it doesn't look like a slowdown, does it?
For at least for the EPC industry, the railway plus T&D, I think we are doing pretty well.
Okay, on that very optimistic note, we will leave it at that. Mr. Kejriwal, thanks so much for joining us and giving us details. So that's KEC International, could be one of the big stocks in focus. It's secured almost 900 crores worth of fresh orders in the railway infrastructure segment, and that marks their entry into urban transport. We'll take a quick break. All of these questions and more will be posed to our next guest. Prakash Diwan joins in.